Welcome to Fed Watching for the week of January 14th through the 18th. We're going to have a short daily recap session this time since I was gone on Wednesday and Thursday. I was traveling. And I'll walk you through the up week, the lack of economic news, and then a very interesting updated paper on IQ by one of the most famous people in the field that I recommend you check out. Let's get right into it. It's Monday, January 14th, and stocks are off just a smidge, just a hair, about 0.5% for the large ones and 1% for the small ones. Big news of the day was PG&E announced they're going to file Chapter 11 and restructure after the big wildfires in California, and I guess they said some information about some sort of electrical malfunction right before one of the fires. So more information to come, but their stock just got absolutely hammered today. We'll see what we get tomorrow. I'm sure there'll be more. It's Tuesday. We got a bounce back. Got a nice little update. S&P up 1%. NASDAQ up nearly 2%. Got back a little bit more and everything than it went down yesterday. So, little pleasing little Tuesday. Another day. Not really any news except the cold hamburger stacked a mile high. It's Friday already. And that's because I was in Santa Barbara for business the last 2 days. So, no Wednesday and Thursday. But I can tell you what happened. So, just like today, nice up day. Wednesday, up just a smidge. Thursday, basically just like today. Nice little 1% up day. Great end of the week. Very strong week. Let's get into the recap. Short week for the dailies, and it'll just be a short podcast overall. In fact, I can do the entire economic recap before I get to the market. So while you're taking a look at that, I'll walk you through. Really, the only big news that came out was consumer sentiment report. It went from the high 90s to the low 90s. Seems mostly like it's driven by the shutdown, the federal government shutdown, which seems reasonable. Still not having that big of an effect on the economy, but you got to expect it to drag in there somewhere. There's a lot of employees that aren't getting a paycheck. As you can see, market was up about 3% for the week, even 1 or 2% for international stocks. Treasury yields getting a little healthy bump, up about 3% to 277, a 10-year treasury that is. And just a generally good week for the markets. Broad markets up between 5 and 10% for the year already. So if we keep this pace up, we're looking at like 100% for the year. So let's keep rolling with it. For this week's reading, I got an interesting one and an interesting follow-on for you. So Timothy Taylor comments on a new paper put out by James Flynn, who the Flynn effect is named after. And the Flynn effect is the fact that IQs seem to be going up over time. And so James Flynn found this and published a paper, and it was named after him. And he published a look back, I think it was over the last 40 years. And what he's found is it seems like the Flynn effect is actually stagnating in most advanced economies. The U.S. is actually a major exception here, which is kind of interesting. Lots of ways you could interpret that, lots of hypotheses. The second article I'm going to link you to is a post that was written actually a pretty long time ago, and it's about soccer players. It's from the Put a Number on It blog, and asking the question, why don't the biggest countries have the best soccer teams? That's sort of what you would expect from a naive assumption. And I wonder if these two things are somehow related, these population level shifts that manifest themselves both in averages and in the extremes. So be sure to check them out if that kind of thing's interesting. It seems like IQ is always in the news these days, so knowing what people are finding it always put you a little bit ahead of the curve when you're talking to someone about it. That's it for this week's Fed Watching. I hope you have a good week next week. Enjoy the short one.